Would you therefore start looking at investing in some of those deeply discounted UK companies that are pretty much running the same businesses as international businesses, but at a much cheaper valuation?
Absolutely. Look, I mean, I think that I grew up in Europe. I'm based in the US. I'm Canadian by passport. And wherever you are, grass is greener on the other side of the road. And I'm really find it amusing, let's say, to hear Europeans muse on how, better structured America is or how much more entrepreneurial the system is. At the end of the day, I think that education levels in Europe are much more consistent and comparable for entire populations to the US. Capital is certainly available. The economies are there and are very large. And I think that the ground is there and the soil is fertile for emerging technologies and for new companies to continue to emerge in your part of the world. So I would tend to be not 50% less bullish on Europe than I am on America and on European ingenuity and industry and commerce. I would be, comparable. Well, I mean, to be totally candid, maybe not comparably, but I would be at least 75%, more excited about Europe than I am about America, or as excited about Europe as I am about America. That implies a 50% valuation upside. It's a very, very crude and gross way of looking at things, I must confess, but Europe is trading at an extraordinary, unprecedented, generational discount to the US. And that kind of discount, I think, over time will not stand.
Well, I like that you put a number on it, and you put a number on your confidence in European assets going forward. Turning to another asset class, which I know you're quite big in because you've spoken to CNBC about this in the past, gold. Gold, yes. It's been a phenomenal year for gold this year, up more than 23%, but certainly a strange year by many accounts. And we saw a rush of money pouring into safety assets. So, one of them is gold, another one is silver, also phenomenal year for silver. In 2021, and given some of the risks that we've talked about are now behind us, the speed bumps, what does that mean for the gold outlook from here? And can we continue to see this type of performance?
Look, the last thing I should prognosticate is where gold goes if you allow me, short-term time frame, and I would say that a year is a short-term outframe, a short-term outlook. I think it's quite difficult to tell with any kind of certainty where it goes over the next year, but I think over the next 3 to 5 years, gold is likely to head a lot higher, and there's a very good chance, I would say over 50% chance, that it goes up dramatically higher. And the reason for that is there's an extraordinary burst of money supply that is finding its way into scarce but coveted assets. And I think what people do not understand about gold, I am not a gold bug. I have been agnostic to gold for 90% of my career, but over the past, less than 90%, but for the past 5 years, our fund and our firm has focused on investing not on gold itself, but in gold miners, because the world is running out of gold. And I think that's what people don't understand.